please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome to ChartBusters, the show we're going to highlight all the buzzing stocks. It's post Christmas Day. It's Mangalam, that sort of day, and in fact the markets are doing absolutely nothing. The mid-cap index is trading well in the green, and the Nifty Bank, that's a bit of a sore point in today's trading session.
That's like a lot of people after Christmas who do absolutely nothing. That's as far as the markets are concerned. But then there are a lot of people who do a lot of things as well, and that's the mid-cap action, because the mid-cap index, the fifth straight trading session of it hitting a record high, and as we speak, Ramco Cements and Granules, both of them should come up for you, have hit the high point of today's trading session. We'll keep an eye out on all those individual stocks, but first a look at all the top stories that we're tracking. Gail, that one gains in trade today after reports suggest that IOC and BPCL are keen to acquire Gail. Both the oil marketing companies want to become fully integrated energy companies.
And ID companies in focus as the US Department of Homeland Security is readying a proposal that will make getting H-1B visas more difficult. Infosys is among the top losers on the Nifty today.
SAIL is higher in trade today after the Prime Minister's office has asked all the government departments to prioritize the use of local products in state projects. This after the Steel Ministry objected to a global tender by the Railways Ministry seeking tons of steel rails.
And Jet Airways is up nearly around 4% after the stock comes out of the F&O ban.
On to another couple of stocks that are buzzing today. Cummins in talk to acquire Kirloskar Oil Engines in $500 million deal. That both the stocks are up. Welspun Corp gains over 5% on the back of a new order win. And Dilip Buildcon gains after the board approves to raise 600 crore rupees.
All right, then, the Nifty has come off the top. In fact, we're trading in the red. The Nifty Bank as well has moved virtually to the low point of the day. So just keep an eye out on a few of those stocks as we speak. Rajat Bose is with us though. Hi Rajat, good morning. Compliments of the season. How would you trade the Nifty in today's trading session? Are you looking at buying into this dip? Are there any levels you're looking at?
First of all, same season's greetings to you and Mangalam and to all the viewers of your channel. And we are doing something right. Sitting here giving trading calls.
Right.
Anyway, what I would say is that in the morning I referred to two critical levels in my reckoning. One is 10,488. And my take was that if the Nifty were to stay above 10,488, then I would go long, because in my view, the Nifty is likely to scale up to 10,707. That's a very important Fibonacci level calculated from that earlier high, the 8,900 to about 7,900 kind of the downswing. If you reverse it and do a 2.618 times, you get 10,707. Generally, 2.618 times Fibonacci occurs pretty. It actually works out pretty well. So from that perspective, my target is 10,707. But I would be waiting for the Nifty to really clear 10,488. That if it goes and sustains, I would go long and put a stop loss below 10,445. Not risking much, but I am not gung-ho bullish either at the same time. But there are lots of mid-cap stocks to play, and I am actually looking at a few of them.
Which are the ones you're looking at, Rajat, as you spoke about the mid-cap space?
Seen that housing finance and realty companies have been doing well. So I have chosen a realty company and a software company. Anantaraj is my stock. It has been showing great momentum over the last 5 trading sessions. Today is also not an exception. 70.75 would be my stop loss, and I would be looking at 73.75 and 75 as my targets. And Vakrangi is another stock that I am buying. Stop loss below 405, target 416 and 419.
A couple of stocks from the mid-cap space buzzing despite the index coming a little off the high point of the day. Jet Airways, that one's taken off out of the F&O ban, and that one's moved to the high point of the day. Along with that, we have India Cements too. That one too has moved to the high point of the day. Cummins, there are reports of that deal coming in with Kirloskar Oil Engines, and that one has been buzzing all through today's trading session. As we speak, a spike to the high point of the day. But one stock which is buzzing is GNA Axles. Buzzing in trade this morning, up over 3.5–4% as we speak. The stock at the high point of the day, 8% as we speak now, on the back of some inter-sea promoter transfers. A lot of these bulk deals that took place, rather transfers that took place, and they were disclosed to the exchanges over the weekend. Mr. Ranbir Singh, the president and CEO of the company, joins in now. Thanks a lot, Mr. Singh, for joining in. First up, if you could just make a simple clarification, how much stake do promoters hold as of now? What was the disclosure that the company gave to the exchanges over the weekend? Who sold, who bought? Were they a part of the promoters?
Good morning. Earlier, the total holding was in the tune of 70%. Now, the overall holding is, promoter holding is around 66%. And one promoter family has sold around 6 to 7%. And out of that, around 2% is purchased by within the family. So total dilution is around 4.5% in the market.
All right. Hi, Mr. Singh. So your stock is up and about even after that one promoter entity did sell a stake, telling you that there have been some big buyers as well. If you could clarify to us, sir, who were the buyers? Are there some funds that have bought this stake that was being sold by the promoter entity? And also, if you could help us out, sir, now it's at around 66%. Do the other promoters intend to take the stake back up to maybe 67, 68%?
Immediately, I cannot tell about this thing, but whatever dilution has happened, I think this will be stable now. And the overall, these 4.5% has gone into the market. It has increased the float, and the taking has improved because of this in the market. Because GNA Axle's share is in a high demand, and the performance of the company is improving.
Mr. Singh, but that promoter who was selling, has he already sold out, or is there more supply that could hit the market?
So it has not hit the market, and it is already our shares in the open market were very little according to the company size and the overall demand of the shares.
Yes.
It has not affected at all our share price.
Okay.
Yeah, we can see it has not affected your share price, Mr. Singh. In fact, on the other hand, the share prices have only gone up. That usually happens when some influential investor enters a stock despite the promoter selling. So if you can give us some clarity on whether you have the book or not with you, which could tell you, who could the buyers be? Someone, some fund, some influential investor. Any clarity on that?
But immediately, I do not have the details readily available with me.
All right, Mr. Singh, then the takeaway is that, in fact, promoter holding is at around 66%. One promoter entity sold roughly around 6 to 7%. Out of that, another promoter has bought close to 2%. So that's the takeaway in terms of promoter shareholding. Well, let's talk about your business then, sir. How is business on the ground? I remember you joined us in October 2017. At that point of time, you told us that order inflows to the tune of nearly around 60 crores on a per month basis. Is that number holding at around 60 crores? Has it increased? Do you see good demand on the ground?
The numbers are holding, and we are very hopeful further this will improve in the coming financial year because North American Class 8 and above vehicles outlook has come, and next year again they are growing by 20%. Okay. And our domestic market is also performing very good, and tractors has grown up very well and now stable. And commercial vehicle segment is also growing because a lot of infrastructure investments are there by the government. So it has given us a positive effect in the demand.
Okay, so the 60 crore order inflow that you're talking about amounts to about 360 crores in terms of revenue for the next half of this year. Is that a possibility? And you spoke about that going higher. To what level can it grow in the next coming months and FY19 itself?
Actually, this year, as we have originally given our targets to cross 15%, so we are sticking to the overall growth, and and in coming year we are further investing, and those investments will be completed by 31st March this financial year, and next year again we are planning to grow by 15%.
Wow. So by FY20, what can your revenue number look like, sir? And I remember in the last quarter, there was a bit of disappointment on margins because of some forex impact of around 0.5% approximately. This time around, margins could hold at around that 15.5–16%. Is that doable, or is it? Can you better that number?
Third Q3 is not complete, and balance sheet is not as yet completed, and a lot of fluctuations are there in the steel. You know, steel growth, incremental increase in the steel prices is there. It is definitely it is affecting some margins in general, but overall profit will grow because the top line is growing. So overall profit. Margins will grow. So
FY20, what should your revenue number look like, sir? You were talking about growing 15% this year. Next year as well, you're going to be doing, 15% or so. Is that?
As earlier we have declared in 20, we are targeting to touch or cross 1,000 crores level top line.
Cross how much, sir? By FY20?
1,000 crores.
1,000 crores by FY20. That would be much more than the 15% growth that you are projecting, sir.
No, this is the lowest level I am telling you, but it all depends on the market also, North American, European, and domestic market. And our main mission is to keep intact, and our facilities and our infrastructure should be intact. The moment the market will behave or demand will be there, and we should be competent to feed our customers.
So, Mr. Singh, your current capacity is what? I remember it was 3.5. Then you were telling us it will increase to around 4.5 million units. What is it currently, and where do you see that go?
It is 4 million components. The capacity will be completed by 31st March. That will be 4 million components.
4 million, okay.
And and we are putting up a new plant that is for SUV axle shafts and light passenger vehicle axle shafts. So which will come up by end of next year. The infrastructure will be completed. That plant will start commercial sales by end of 2018.
All right.
That is how we are targeting.
And before we let you go, Mr. Singh, if you could tell us how much does domestic contribute in terms of your revenue? And you spoke about that growing faster. What is the expected growth rate there?
The overall the dependency upon domestic is around 50%, and overall growth in export and domestic will be around 15 to 17%.
Okay, all right, Mr. Singh, thanks so much for joining in, sir, today and clarifying on the promoter holding 1,000 crores in terms of revenues by 2020. Margins could see some pressure because of steel prices, but otherwise the company has been growing, and in this year itself, if I'm not mistaken, the stock is up nearly around 65–70% or thereabouts. Today's move actually will add on to those gains. In this year, in the last 1 year, it's up 140%. So keep your eye out on that front. Per month, the order inflow is nearly around 60 crores plus. So we'll keep an eye out on that stock. Big gainer. We'll be looking out to see who were those buyers when the promoter was selling. We don't have those numbers as of now. By the end of this quarter, we should have those numbers. Well, let's move on then. Anuj and Lata, they caught up with some of the mutual fund managers to chat about stocks in the mid-cap, pharma as well as the IT space, considering the recent attention to those sectors. Could this trend continue into 2018? Let's hear out the brightest voices on the street.
We need a catalyst for mid-cap IT and pharma to move. Within that space, domestic pharma company looks quite attractive. They have done well, they have grown, and there is probably reasonable opportunity there in terms of valuation.
Navneet, I'm just looking at some of your funds, and the outperformance stands out for me in couple of funds where you have a lot of auto exposure, and some of these auto stocks have done well, and in some of your funds you I think have overweight on autos, clearly more than the benchmark. Maruti is trading at 10,000 now, TVS Motor is at 800, and these stocks are now trading at 35–40 times price to earnings, which we used to give to Hindustan Unilever at one point. So is this the new FMCG? It's accepted now that this growth, so we have to give them 35–40 times?
So I have to see from two perspectives. So within the autos, again, there are stocks that have done very well. I think wherever there has been over the last few years a strong earnings momentum, the price momentum has been very good. So you have peak volumes, peak margins, and then the peak valuation. And that scares you a little bit. And you have to be slightly careful about that, how sustainable that volume growth as well as the margin growth is. Maybe in some cases, some of these positive factors that have run in their favor may run out of steam, and you need to be careful about the valuation. And within that, you need to maybe identify some of the other stocks where valuations are relatively more reasonable. So in the consumption space, we have seen a peculiar feature this year where there are few of those pockets like passenger vehicles or the air traffic or air conditioners have done well, while the overall consumption may not have done that well, and some of those stocks have delivered very well. But next year, if the rural economy does well because of the government spending and everything that has happened in terms of road connectivity, the digital connectivity, financial connectivity, crop insurance, etc., and high government spending, maybe it could be more widespread and some of the other segments within the consumption does well.
Okay, actually let me extend that theme. Naren, the flag bearer of the mid-cap index, not the only, but the flag bearer, was the NBFC sector. Will that continue, or will it hand over the relay baton to somebody else? If it is somebody else, who?
Actually, we believe, with interest rates going up and the cost of wholesale funding on the way up, and the fact that public sector banks have been given capital, I think the entire situation on the NBFC space is deteriorating for the NBFCs relative to other sectors, and these stocks are now no longer cheap. Their market caps are pretty high. So we believe that, but having said that, there are always poster boys of every boom, and we have to accept that the poster boy of this boom has been the NBFC sector. So while the boom lasts, and this sector still should continue to do well, but I would say the risk-return reward is no longer in favor of the sector at this point of time. And the good thing is some of the more defensive areas in financial services like insurance have also got listed. So there would be some amount of move from these kind of sectors to also insurance kind of companies which are not leveraged. So they get the advantage of being an unleveraged entity in financial services.
But what NBFC has done is that it has expanded the category itself. I mean, you alluded to insurance, but now AMCs are also listing. So because of conflict of interest, I'm not asking Manish this question, but Nilesh, do you think NBFC has this extraordinary ability to create, okay, if I'm done with housing finance, there is wealth management, there is AMC. Do you think NBFC can still be the theme, only different kinds of guys?
So one, will all the NBFCs have ability to reinvent itself?
Yes.
I don't think so. Okay. Today also we are seeing specialization. There are some guys who are specialized in housing finance. They may reach a saturation point. We have seen downturn in commercial vehicle and automobile NBFCs when the downturn hit them hard. So there will be premium for those NBFCs who are able to disrupt the business model of NBFC sector. For example, Bajaj Finance came with a technology and it disrupted the way consumer durable loans were given. Okay. If you can create that kind of niche, if you can create that kind of competitive advantage, there is opportunity. And on the asset management business, we are virtually infinite ROE business. In most AMC business, we have returned the capital invested by our sponsor long back. So obviously this kind of businesses will have its own premium valuation. But at the end of the day, will there be a sector rotation from NBFC to something else? Undoubtedly, yes.
Let's focus on some of these mid-cap stocks. One such stock that's been doing very, very well in this month and in fact in this year is Vardhaman Holdings. In fact, it's up close to around 15% today. It's up more than 50% in the month of December. Mangalam Malu is with us. Mangalam, you were telling us, about this company earlier. You had spotted it. I think the stock has done phenomenally from there. But tell us, what about that discount? It used to be quite large and that is narrowing down as well. Give us all the details about this big move that we have seen.
That's absolutely right. Nigel, the discount has narrowed and that is something we need to watch out for. Vardhaman Holdings, yes, it has moved a lot this year. It's a holding company of all the Vardhaman Group stocks. I remember you pointing out a couple of them, the textiles and acrylic stocks in your Midcap Mania segment as well. Not just the Vardhaman Group stocks, they also have some small holdings in stocks like Welspun India, Trident, Infosys, Bajaj Finance, and they have a small investment portfolio. So let's take a look at the valuation or the value of investments that they have. Vardhaman Acrylics, about 3.5 crores, not too much. Vardhaman Special Steels, we've spoken about that, 51 crores in terms of value that they hold there. Textiles is their biggest holding. 1,850 crores worth stake is what they hold in Vardhman Textiles. So put all of that together, the total value of investments is 1,900 crore rupees. And this compares with the company's market cap of 1,800 crore rupees. That means a holding company discount of 5%. Remember at the start of this year when we were talking about this, the holding company discount was 40%. We spoke about the cash and current investments as well. And let's do the holding company discount. X that still is 25%, which was 60% at the start of this year. So we need to know why exactly is this holding company discount narrowing, where you have all the other companies, the likes of Bombay, Burma and all of them, with trading with higher and wider holding company discount. Does the street know something that we don't? We need to keep an eye out on that. The second thing is the concern, which is low dividend payment or low dividend payout. Irrespective of the EPS that the company has done, the dividend payout has remained at 3 rupees over the last 5 years. And last year, the EPS tripled, but the dividend payout still came in at 5 rupees. And then the low float. Promoters still hold 74.9% stake. The remainder is held by influential investors, some private equity players, and all of that as well.